Thursday, November 12th, 2020, Maneco 64, home of alternative economics and contrarian views. So today we're going to look at whether the Comex is a bucket shop in trouble. Comex, of course, is the futures exchange where gold and silver futures are traded. And to do that, I'm going to first reference a great book that I recommend to anyone. Really, you don't have to be into trading or into financial markets. It's just a really interesting book. It's called Jesse Livermore, World's Greatest Stock Trader by Richard Smithson. Here's the book. My wife's read it too. She loved it. I've read it a couple of times. So let's look at what a bucket shop is then. Let's skip to page 28. So here we go. Arnold Rothstein, known in the underworld circles as the Brain, was a genius with money. He started out as a gambler, but after a fantastic string of successes, he became an underworld king and lived like it. He was accused of many crimes, among them fixing the 1919 Black Sox World Series, shoeless Joe Jackson, if some of you remember. His fortune was vast. His financial tentacles reached into every vein of American vice. Among Rothstein's many holdings were most of the bucket shops in the major cities of the United States. A bucket shop looked like a broker's office. It had a gallery for the customers, a chalkboard to record the stock quotes, and an active stock ticker spewing out the daily trades on an almost instantaneous basis. But it was more like a horse betting parlor than a true broker's office. At a bucket shop, traders could play the market on 10% margin. Well, I would say the Comex is a little less. You don't need as much as 10%, probably between 5 to 10%. And for the big boys, for the big speculators, hedge funds, for the bullion banks, I'm sure they pay probably 5, maybe even less. In other words, traders needed to have only 10% of the price of the stock they wanted to buy. The rules were simple: put up 10% and make a bet by buying a stock. A ticket with the buy number would immediately be printed and given to the purchaser. This ticket would indicate the time, the price paid for the stock purchased, and the number of shares purchased. The purchaser would watch the quotes, and as soon as the stock lost 10% of its value, the shop moved in quickly and swept away the money. Conversely, if the stock price went up and the trader won, the trader went up to a clerk who marked the ticket stub with the price of the last trade on the stock ticker. Then the trader went to the cage window to collect the money. It was a sucker's play. The house won 95% of the time. Sounds familiar? Most important for the functioning of the bucket shop, the money spent to buy the stock was never sent to the floor of the exchange. It was only booked by the bucket shop. The bucket shop would hold the bet like a bookie. Bucket shop action was quick and fierce. Traders could buy as few as 5 shares or as many as the house could cover, thousands of dollars worth. So what's that got to do with Comex? Well, I'll tell you what it's got to do, because I worked as a futures broker for 20 years. I started out in the futures market at Citibank for 2 years. Then ABN AMRO Bank bought the futures department of Citibank in 1997. I worked there for another 7 years at ABN AMRO. And then in 2004, I started out at MF Global. And previous to that, I was working more with institutional clients. I continued to do that, but we also started dealing for some very wealthy private clients, and we started doing futures on silver and gold. And I was thinking and also talking to one of our big clients who was doing a lot of gold and silver on Comex about taking delivery of gold, because I thought at the time, and I knew at the time, and this was before even 2007, that the Comex was a purely paper market, that if you took a delivery of a big size of gold, you could put the cat amongst the pigeons, so to speak, because there's a huge short position always by the bullion banks. So I spoke to my boss and told him about the idea. And he said, well, that's a stupid idea. And I said, why? You know, this is a gold future. You can take delivery. He said, oh, we never take delivery. This is just for speculating on the price. We've never taken delivery of gold or silver. So this is the mindset of the brokers in the space. So that's why the Comex is like a bucket shop. You're just betting on a price. Unfortunately, it still controls the price of the real thing. The bucket shops, of course, they didn't control the price on the stock exchange, but it's a very similar mechanism. So here's where Jesse Livermore comes in. It says, because Livermore had no capital, no stake, it was inevitable that he would enter the bucket shops, a world controlled by the crime bosses. It was only a matter of when and how. In 1892, when Livermore was 15 years old, his friend Billy, another Broad Crew kid, approached him. Jesse, you got any money? And Jesse said, I'm eating my lunch. Never mind your lunch. You got any money? And Jesse replied, why? Jesse at the time was already working for one of the brokers. So I think he was a chalk boy or something like that. I got a tip on steel. That's U.S. steel. I need somebody to go in with me. How you going to play it, Billy? Livermore asked. Bucket shop. I'll run over and make the play during lunch. How much you need? I need $5. I want to buy 5 shares of U.S. steel. It's selling at $10. Just a minute. Livermore reached into his pocket and pulled out his notepad. What's with the notepad? Billy asked. I'm reading my horoscope for today, Livermore answered. It wasn't a horoscope. He kept all these numbers about all the stocks, how they were trading, the ticker. You check the history of the trading figures on U.S. steel. In his notepad, the numbers were moving in the same patterns as they usually move before the stock went up. He was satisfied they had a good chance. Okay, he handed his friend the money. 2 days later, he smiled as he pocketed his winnings, a pure profit of more than $3. Livermore was in the game. He was finally a player. So that's a bucket shop. You bet on the price, and you do it in a leverage manner. It goes on to talk about how Livermore started going around all the bucket shops in Boston. He was originally from Massachusetts, Jesse Livermore. He grew up on a farm and he left the farm and went to Boston. So yeah, it talks about how he went to all the bucket shops in Boston, but he wasn't welcome anymore because he was always winning. By age 16, he had amassed $1,000, which was a lot of money at the time in the 1890s. So eventually he went to New York to go to the real stock exchange. But yeah, that's what a bucket shop is. You're actually just betting on the price. But what's going on now? Is it a bucket shop in trouble, the Comex? Well, I saw an article yesterday on King World News. It says, Alistair McLeod, look at what the wealthy are doing as gold and silver prices plunge. And we'll go through this article quickly. And then I'll talk about what a future is for some of you who don't know. So it says November 11th, Eric, it is important to understand the interests behind this week's markdown in gold and silver prices. Last week, the bullion banks were beginning to be squeezed by hedge fund buying of Comex gold contracts on top of their near record shorts. They are really hurting. So I would say the bullion banks are almost like Arnold Rothstein. They control the Comex or the bucket shop. What's a short? What's a long in futures? Well, in futures, you're basically buying something forward. And on an exchange, there's a standardized contract. So the December contract, for example, that is being traded right now on Comex, the first delivery date for the so-called commodity that's underlying the future would be in the beginning of December. And you've got until the end of November to close out that position. So if you are a long gold contract That means you buy the contract. The way to close that out is either to wait for delivery in December, or to initiate a short to sell the future. So you close out, you net out the position, just like you would in a bucket shop, right? And of course, you got the leverage. You only need to put about 5% down in these futures. So that's how it works. It's just buying something forward. You have a contract, or selling. You can also sell something forward, and with leverage. Markets are both thin and volatile. So we saw the Dow jump over 1,000 points in response to the promise of a vaccine that will begin to be administered hopefully in December. I'm not sure why he's hopeful about that, but anyway. But most of us will not get it before the new year. Well, I don't plan to get it. What is not realized is that in thin markets, equity prices are being driven by monetary inflation, which will continue because the economic damage goes well beyond the coronavirus. Extremely thin markets also exist in physical gold and silver. Well, that's the real physical gold and silver, right? Your bullion dealer, your coin dealer. Everywhere I hear stories of only small amounts of coin and bar are available, and for any decent quantities, there are considerable delays in delivery. Obviously, this does not apply to paper gold, which is created out of thin air. So why are coins and bars not available? Because all the gold and silver, or at least all the gold that's ever been mined in the world, most of it is still above ground. Well, it's because people want to hold on to their gold. The people in the know that the national currencies are doomed. So they don't want to get rid of their gold coins or bars if they can. They're holding on for dear life, so to speak. The situation is why I always tell people not to trade in paper gold unless you're one of the very few speculators who consistently make money trading. Well, that's the 5%. That's the Jesse Livermores. Gold and silver are sound money, and physical bars should be owned and held as such. If you understand the fragility of fiat currencies and the accelerating debasement by central banks. So here's where the interesting part comes in about why I think the Comex could be in trouble. And granted, people have written over the years a lot about this, that the Comex is in trouble. There's going to be a failure to deliver. But let's go through this anyway. What the wealthy are doing. We are now 13 trading days away from the expiry of the December gold futures contract. I think what he means actually is 13 days away from when you can close out your position and not be, how can I say, liable to deliver or take delivery in December. The December future actually expires in December, but it goes off the board. It's not the front month anymore after the end of November. I think that's what he means. Buying futures and standing for delivery is the only way the increasing band of the very wealthy and their families beginning to be frightened by monetary inflation can acquire decent quantities of bullion. So these very wealthy and their families, they don't realize that the Comex is like a paper market, and they're going there, and Comex is having to deliver to them. And I think they're going to have trouble. And that's what Alistair McLeod thinks as well, because they can't get any big amount of gold anywhere else. So this would be like very wealthy people starting to go to the bucket shops and buying US Steel and other stocks and trying to get the stock certificates. Of course, they wouldn't do that because they would be in trouble, because bucket shops were bucket shops and criminal enterprises. But Comex can't be seen to be a criminal enterprise. So there's a few things the bullion banks can do. They can try desperately to find the physical gold, or they can cover their short positions by going long and then having a flat position. They can cover also their short positions and then go long again and also ask for delivery. But all that's going to do is put pressure on the price to rise, the paper price. This knockdown is a great opportunity for them to do just that. So he's saying that the knockdown in the price is a great opportunity for the very wealthy and their families to come in and take delivery of gold. Well, to go long first and then wait for delivery in December. And this is a note from King World News. It says the wealthy have in fact been taking delivery of gold in record numbers off the Comex. If this pattern continues, the staggering volume of paper claims on each ounce of gold may begin to unravel the paper gold system on the Comex. For now, do what the wealthy are doing and accumulate physical gold and silver. There you go. With that, then, let's look at where the markets are this morning. It's 8:48 a.m. London time. Spot gold is at 1868. It's up about $2.50. Range has been 1858 to 1873. One thing I would say about precious metals, as McLeod said, you hold it for safety. You hold it because you don't want to hold fiat currency. So yes, it's frustrating to see the paper price do what it's doing, but you need to be patient and think long term and think about gold and silver as insurance. Spot silver is down 10 cents at 24.16 or 0.4% lower. The range has been 24.36 to 24.02. The Dow futures down 150, 0.5%. S&P likewise down 0.5%. Nasdaq 100 future is down 0.25%. FTSE is down 1%. So what about the foreign exchange market? While sterling is down 0.2%, 131.96. The euro is up slightly, 117.90. The dollar's down slightly versus the yen, 105.34. Dollar up slightly versus the yuan at 662.64. Crude oil is down 0.25% at 41.53. To finish off, the 10-year yield is down 5 basis points today. That's quite a big movement here. It's at 0.94%. So it closed almost near 1% yesterday. So it's coming off now. Prices are going up. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parler, and all these other platforms below. I wish you all a great day. Take care. Bye.